Let's talk about putting together and how to put together your indicator combination. Again, it's not my combination, it's your combination that you feel strong about, comfortable with, and really can, know it inside out, right? So let's talk about how to put that together. So step one, you want to pick a primary, right? And again, you can back test this, you can paper trade it, you'll have all sorts of opportunity to practice with it, but start thinking about a primary indicator that you're going to, start using. You might have one already that jumps out in your mind. And then you want to pick a confirming secondary, right? So this is all kind of stuff we've learned a little bit before. You pick your primary, pick your secondary. But here's the key part of this lesson, so to speak, as far as putting together your indicator combination, is it's important to have them measure different things. They both are going to be indicating whether it's a trend maybe or a continuation or a reversal, whatever it might be. And it's, ultimately you're going to, get a signal whether you should buy or sell or do nothing for sure. But the purpose of the indicators, what their philosophy behind it and their technique behind it is they should measure and do different things. For example, you don't want to have your primary be an RSI and your secondary be a stochastic oscillator. You probably can figure out why that is, and that is, why? Because both are momentum indicators. You're not getting a really true fair look at it. They're different as far as momentum indicators, and they have their strengths and weaknesses compared to each other. I have a whole lesson on that with those two, for example. But it'd be even better if you had something outside the momentum indicator family to use as either the primary or the confirming. So you have kind of almost that, that real, two different eyes in effect, but they're indicators, they're not real things, but they're two different ways of looking at it. And if you get that, then you're less likely to have a false signal or something, because not only is my primary showing something, but something that's different family of indicators is also confirming the same thing that maybe, let's say, for example, this is a buying opportunity. And that makes it and then you'll feel much stronger in your trades and more confident in that, because you have these two different looks at it. So here's a classic error around that. If you think about kind of similar to those momentum ones was, a lot of folks will say, well, I love that moving average crossover indicator. And so I'll use the shorter time frame as my primary, the blue line in this example, and I'll use the longer time frame, the pink line, as my secondary, as my confirming one. Now, do you see the error in that? It's a pretty classic error, right? Because if you're using where we're not talking about actually using them to cross over prices, we're talking about crossing over each other. And as we remember from previous lesson, well, the moving average crossover indicator, when they cross over each other and you're using that as your buy and sell, together they are in effect one indicator, right? So I'm not looking at when the prices go above or below the blue line or above and below the pink line. You could not even have prices on the chart at all. I'm looking at the two lines crossing each other, and that is in effect one indicator. So you want to confirm that with another indicator, like the MACD, for example, moving average convergence divergence, or some other indicator to kind of confirm that. So just be aware that indicators are using maybe multiple parts of a chart pattern or candlesticks or whatever. Understand, like this is a good classic example, where you have to use them both together to be the real indicator, and then you need a secondary to cover that. So just be aware of that.